nationally from the perch on which you sit?
You know, we've been very impressed with the resilience of the consumer and the strength of our traffic, despite the difficult, macroeconomic conditions. There's some pockets of weakness. You see with lower income consumers, for example, or certain states, you see some weakness, but overall, we've been quite strong.
No pockets anywhere in America.
No, there have been pockets. So there are pockets of weakness, right? So you see, for example, in California with gas prices where they are, you see some weakness there. You see some pockets, but overall, the consumer's been good. The biggest issue we've had throughout the year has been on the supply chain side, commodity pricing, especially in the second quarter, that's come down. So lots to contend with, but the consumer's been, pretty resilient, all things considered.
You mentioned California. Obviously, we just talked about oil. Do you notice, like day to day or month to month, an impact on your business based on where gas prices might be averaging? Does it really matter to you?
Yeah, it does. It does, right? The consumer is very sensitive to food pricing and to energy pricing or gas pricing. So where you see big disparities, for example, California right now is about $2.50 higher than the national average on gas and increasing month over month. So you're seeing a lot more pressure there, for example, than in some places where the gas prices are actually coming down. So you see some of that, you see some disparity, and it does impact the traffic patterns and the consumer's willingness to spend.
Where are the workers? Damola, where did everybody go? I know you're out there in Arizona. I was at Phoenix Airport. Arguably, it was toward the beginning of this year, so it's different. And almost every single shop in Sky Harbor Airport was shut down. It was just simply no people. Where did they go?
Based on the numbers, a lot of them left the labor force, right? If you look at the participation rates, pre-COVID and post, a lot of people left the labor force, and there's a bunch of reasons for that. One is, there's a tremendous amount of stimulus produced during the pandemic that created a situation where a lot of people didn't need to work, right? To be frank,
literally had enough money and may still have enough money that they don't need to have a job.
Yeah, I mean, look at the savings rates. Look at the bank account balances pre and post COVID. There's a big spike, right? So, people were compensated well, or there was a lot of stimulus during COVID to where it was a real question: do I need to work, or are you better off not working, right? Or doing something different. And then on top of that, with the markets up and crypto up, that creates a big question as to whether it makes sense for people to work, right? So. That's changing. You're seeing some improvement in the labor force. You're seeing some, softening, and it's becoming incrementally easy to hire. But pre and post COVID, we're still in a very different place than where we were in terms of the
do you
labor
see that?
participation.
How long do you see that lasting?
It's hard to tell, but it's an important question because the strength in the labor market is one of the reasons why. The Fed is able to, focus almost exclusively on inflation because you haven't seen the labor market collapse quite yet, right? So there's still a lot of strength there, and as long as that remains true, it gives the Fed some leeway to move forward on tackling inflation and keep the economy intact. But if that changes, you could see the economy change pretty dramatically.
Well,
so it's something that everybody should be watching, and we'll have to see how that plays out.
Well, first off, a big shout out and thanks to your people at all your stores, because if they weren't coming into work every day, the chefs, the line cooks, the servers, the bartenders, in particular the bartenders, we would not be able to dine out. So I want to seriously give a huge shout out to everybody that is going to work, because you make it possible for others to have fun and to do stuff. That said, our good friend Tillman Fertitta, he owns a bunch of restaurants. You might have heard of this guy. Mastro's, his steakhouse, actually, I think began in Scottsdale, Arizona, or Phoenix, where you are.
Sure.
You've got to compete against restaurants like that for your staff. I mean, if you've got a really top-notch server, I mean, just skilled, good with people, shows up every day, what are they making? You got to pay them.
That depends.
You got to pay them.
That depends where you are, and it's changing rapidly. Is the other thing I'll say, right? So we have some markets where wage inflation has way outstripped the national average. The hot markets that are growing really quickly. Phoenix is one. Nashville's another. But it's important to stay on top of the local dynamics. The right wage really depends not only on what town you're in, but what part of the town that you're in, right? It's really market by market.